All right, we are officially live. What's up, my friend Matt? How you doing today?
I'm good, Matt.
so, um, so I'm here in South Jersey. You're in Central Jersey. The
North Jersey, North Jersey.
That's not north. You're not even close. I grew up 3 hours from where I am, and you're halfway. So,
Okay. I'm in Mawa.
yeah. So I guess what I wanted to kind of go over today was everybody is reading and hearing and talking about the fact that people are going to be missing mortgage payments due to this crisis. No matter what we do, that's going to happen.
Right.
And our job as real estate professionals is to kind of give them our knowledge. And you're an expert in short sales and helping homeowners keep their homes, with loan modifications and more things like that. So I really wanted to have you on here to kind of discuss what true options are, because you and I have been discussing the fact that what everybody's reading isn't true.
Correct.
And we want to give them the right terminology to talk to their bank so that they know what they're asking for and what it really means.
Right.
So first and foremost, if you could tell everybody what you do, how long you've been doing it, and a little bit about your company, that'd be great.
Okay. So my name is Matt Merenoff, better known as Short Sale Savage. They also since 2005, 15 years. I also go by the name Hebrew Hammer, which people love. Master Disaster. No, I'm kidding. I've been doing this crazy whirlwind of business with distressed real estate for 15 years. I got into it. I worked for my brother-in-law, my sister-in-law's mortgage company, and towards the end of my career, I ran a for sale by owner service. It was recognized nationally. I ran, I think, 4 counties in Jersey. They did very well. But in 2005, when I left the industry, there was a niche. There was something that was going on in the industry where loans were starting to mature. Let me back up. 2005, nobody knew who I was, and they had no idea really what a short sale was. By 2007, people were lining up to take the classes that I was offering through an education company, and my name started to basically circulate throughout New Jersey. Over the last 15 years, I built a reputation on a national level. 5 years ago, I went nationwide with services to help people basically know what their options are.
Right.
So my company, Realestate Recovery Group, was put together based off an idea, concept that I had. People are like, "You're not going to succeed. You're going to fail. The idea, concept that you want to do is ridiculous. You're looking to help people that are in distress with their property. Not everybody can stay in their house, but at least they should find out what their options are. So we're doing short sales, loan modifications, um, settlements, foreclosure prevention for people that may or may not be ready to leave their property at the time when the sheriff's sale pops up. So there really are options. There's ways to combat and attack with the bank and push back to get you the time that you need to stay in the property, and or maybe try to do some type of workout with the property itself.
Yep. Awesome. So I guess first and foremost, I want to kind of discuss the terminology, right? So right now, I happened to check earlier today my personal mortgage company, what they had out there. In knowing the terms myself, I wanted to know what's on their website.
Right.
Luckily, my servicer has, due to COVID-19, are you missing or in threat of missing your mortgage payments? Click here.
Mm-hmm.
It's the link was broke, which tells me too many people are clicking there.
Right.
And there was a bunch of disclaimers on it. So I believe, a lot of people are going to have, or the websites are going to be updated. But let's talk about the terminology, right? So we're hearing forbearance. That's what's being talked about.
Right.
Can you explain what that is?
Yeah. So basically, a forbearance is where, let's say right now you can't make a payment. And I'm going to break it down in layman's terms, make it really super easy for people so they understand. Let's say your mortgage payment is $2,000 a month right now. Next month, if you don't pay it, it's $4,000. The third month, it's now $6,000. At the end of that third month, what the bank is not telling you is, or they're being cryptic about it, you have to come up with $6,000. So right now, if you don't have $2,000, how the hell are you going to make a payment of $6,000 in 3 months? Now, based on conversations that I'm having with the banks, they're also talking about maybe extending it. Great. So now if it's 3 months, now it's 6 months. If you can't make a $2,000 mortgage payment, how the hell are you going to make a $12,000 mortgage payment at the end of 6 months?
Right.
And their answer is, well, there will be other options. Right now, this is what we're offering. Well, that's BS.
Right.
And I'm going to tell you why. What they're not telling you is if you don't make your payments at that point, yes, they have not reported on your credit report. They have not given you late fees. But I'll tell you what they are going to do. They're going to start the foreclosure process on your property. That's the truth. Now, let me back it up. I usually put my money where my mouth is. I called my bank 3 times. My assistant called her bank 3 times. Each time we called in, we got a ridiculous answer. So if you took all 3 phone calls together, you probably would get the real answer.
Right.
No matter, I'm not going to divulge. I'm not going to let you guys know specifics with banks, but I will say that I was on a call earlier today with somebody that does auditing on the files in-house, upper management at a bank, not a service company, a real bank. And they said as of right now, today, they've done over 30,000 forbearances for clients in their bank. And I said, that's outstanding. How many of your reps are messing up when you're explaining what the forbearance is? Right. And let me explain what the forbearance is versus what they're saying it is and how they're getting fined. When somebody calls up as a homeowner and they don't really know what their options are and they're freaking out and they're saying, well, what do I do? I can't pay my mortgage. No problem. We're offering a forbearance. I don't have to worry about the payments? No, you don't. So you're saying at this point, as long as, when I get back on track, I could start making my payments. Right now you have 3 months and you don't have to worry about your payments. And at that point, then you'll start paying your mortgage again. That's it? Yeah. Those phone calls are getting audited. You know how much you're getting fined for those conversations? $10,000. For every time they make a phone call and they don't discuss and disclose the proper terminology in the phone call, right now, I think it's a minimum of $10,000 fine that they're getting charged. And the terminology that they're not giving is what happens after the 3 months. Right. They're telling people right now, don't worry about it because, in a 3-month time period, you'll get back on track. Now, the other issue that we're having is that they're saying forbearance. Some banks are utilizing a deferment, but they're saying forbearance. So right. I believe some credit unions are actually allowing the difference of the mortgage to be put back on the back end of right. the mortgage. That's right. a deferment. That's a true deferment.
So actually, let me stop you there because that's what I want to get into as well. But first and foremost, if you're calling your bank, as a homeowner, some things you guys want to understand is, find out what the details are of your missing payments. Right. If you're talking to somebody and you say, yeah, you cannot pay your mortgage for 90 days, ask them what happens to the money on $2,000. That means I owe you $6,000. What happens, right? And don't just accept the fact that they're telling you that, oh yeah, it's just deferred or whatever it is. If your loan company is going to move your payments to the back of the loan, mm-hmm. you're going to be required to sign something. Mm-hmm. So that's number one, in my opinion, of what's most important. If you're a homeowner calling your bank today mm-hmm. and trying to get your loan payments moved, ask them where the documents are that you're going to have to sign for those additional payments. If not, are you going to adjust my mortgage payment maybe over 12 months or those missing payments, which again would require more signatures. But, the most important thing to me as I describe to everybody that asks me for help, is if you're going to move payments around, guys, you're going to be required to sign something. If they don't ask you to sign anything, they're just withholding payments. And in 90 days, you're going to get smacked with 3 months of payments due, because they're going to think everything's all better and you saved your money, right? You're back to work. 90% of the time, that's not true. So let's get into the discussion of a deferment, which is the next term that people should learn in these times. So in deferment, Matt, go ahead.
Well,
what that is.
Right, you raised a really good point. So before we get into deferment, let's talk about making the call into the bank.
Yeah.
First and foremost, some of them, not all of them, say if you'd like the conversation to be recorded, press 1. If you'd like to opt out of the recording, press 2. Let me make it clear. Press 1.
Yeah.
Don't opt out. Have the call recorded. Not only have the call recorded, this is important, and this is going to be up so people will be able to rewind this at a later date, right, Matt?
Yep.
Okay. So first and foremost, whoever you speak with at the bank, get their name. Not only get their name, get their ID number. Not only get their ID number, find out what department they're in. See if there's a specific phone number to that department. And the reason why I say this, or even an extension, is because you want to hold people accountable. You're looking at these people, right, as they're the experts, and you want to make sure that they're going to give you what? Expert advice.
Yep.
That's what you need to know. And the reason why is because, is it going to help you in the long run? It's not going to hurt you if they say one thing on the telephone and their action is something completely different. The other thing, Matt, you're completely right. Get everything in writing. So important that you get stuff in writing. I'm getting bombarded with phone calls from people that are asking me, what do I do? What do I do? It's very simple. And I'm probably going to have to throw up a video later on. You have to verify, clarify, and get it in writing. Verify it, clarify it, and get it in writing. They're not going to give it to you in writing. I have to tell you, unfortunately, it's probably just going to be a run-of-the-mill forbearance. Now, anything, and let's jump into the deferment aspect of it. When you're deferring it, you're actually taking what's ever owed on the mortgage payment right now and deferring it to the back of the loan. Now, guys, watch out, because if your taxes and insurance is not escrowed in your loan, you're going to have to pay it. So your taxes have to be paid, your insurance has to be paid. Make sure that you're paying your principal, interest, taxes, and insurance, PITI, whatever it is, in your mortgage payment. If you are, then obviously it's escrowed into it, and so is your insurance. So you really don't have to worry about that. If you don't have it, you better worry about it, because the last thing you want to do is think it's being taken care of. It's not. Not that it would be, but it could get sold off to a third party, believe it or not. Yeah. So you want to get stuff in writing. When you're calling into your bank and you're asking them specific questions, it's okay. Ask them, what is the difference between a forbearance and a deferment? The deferment is something that you truly want. Although I have to tell you, some servicing and lending companies, I find more with credit unions right now, are saying forbearance, but they're actually taking the difference of the payments they're putting in the back. So if you have a 30-year mortgage right now, it's going to be essentially 30 years and 3 months.
Right.
So people are like, oh, I don't care, if I have to pay, 30 years and 5 months. Right. Let them tack everything on the back of the mortgage. And in a perfect world, that'd be great. Do I think that we are in serious trouble as a nation? I do. And I do because when I got into the industry in 2005, I saw something that was coming. I have a little bit of a collection background, so I kind of understood what was going on with that. I see another issue coming up. And this is something that can truly be avoided. Will they do it? They're not going to do it. My solution is that they should defer car payments, credit cards, mortgages, anything really major. Insurance should be paid, right? Homeowners association fees should be paid. Credit cards, maybe a minimum payment or half a payment, something in place. and defer for 3 to 4 months. I think if they do that, we'll come back stronger than before. Do I believe that they're going to do that? Probably not.
Right. There's talk about it, and so everybody understands, do not just listen to the press. Do what me and Matt are saying. If you're hearing that your car loans are forgiven or going to be forgiven for 60 days or whatever, don't just not pay your stuff. You really have to go to these banks that you owe the money to, find out the details, sign documents about it. If you're going to be missing payments, sign paperwork on it. Because a couple missed payments after 90 days in our state, the bank will file lis pendens and begin the foreclosure process. Right. And while they're not allowed to hold sheriff sales right now, or that's suspended technically, that's the very end part of this process. And Matt, let's get into a little bit of talk about, people who were in the market and had mortgages in 2006, 7, 8, 9, 10, that may have done a modification, right?
Got it.
And people that have done modifications, please listen. If you have done a modification, these rules may not apply to you at all. You have already renegotiated your mortgage with your bank, and you don't get the same terms that somebody who has a new mortgage who never opted, into any sort of forgiveness or adjustment, the options that they have. So, Matt, in your expertise, go ahead, share what I'm talking about.
So my concern right now is, we're getting phone calls from either past clients that we've done, modifications for, and they're looking at it and saying, well, I'm listening to the news. If you've been in a situation before and you've been late and your loan's already been altered once, depending on who the investor is and or the servicer, they might not allow you to do anything other than a deferment. They might not allow you to do anything other than a forbearance, which means you put yourself right back in the same situation where, let's say, you've already done 2 modifications. They won't allow you to do a 3rd modification. And that's something that's very important. It's very big, because what happens if you can't do a modification? They should be able to answer the question right from the beginning.
Yeah.
They have all the notes in the system. They have everything. If the person who still holds the collateral paper, and this is another question you can ask your bank or your servicer, are you the original person who holds my collateral paperwork that I had when I got my modification? How many modifications actually recorded right now? These are questions that you can ask your bank. So take everything that I'm talking about with a grain of salt, but take it very, very seriously. So if you're in a situation like that, you must communicate with your bank, or if you contact a company like myself, be upfront and honest with these people, the people that you're talking with, myself or my team, because what happens is it's kind of like you go on a date. You don't want to tell, the person that you're dating that, you were naughty 3 years ago, or whatever it is, or your spouse, or maybe you're not faithful to them, to the girlfriend or to the boy. You have to tell us everything, the dirty, darkest secrets you have, because we need to know if we can genuinely help you or not. Yeah. So it's very important that if you 100% have already gone through the process, what they're offering you right now, it might not even be an option. But so you need to ask them specifically, because chances are you're going to get somebody on the line that doesn't know what they're doing. And my prediction is by June or July, this is going to get so out of hand, Matt, that you're going to be a supervisor behind the desk. The phone calls are ringing, emails are coming in. Supervisor's going to get up off his desk and go, "Hey, Larry, what did you used to write mortgages before?" "Yeah, why?" "Drop that mop and get in here. You're a processor now."
Yeah.
That's what happened way back when the mortgage crisis hit before. They were pulling people off the help desk and saying, "You're a negotiator."
Yeah.
What it could happen again.
Yeah, that's I was going to bring that up soon, which is, guys, you're talking to people, back in I guess it was '07, '06, '07 when the whole crash started last time, and all of a sudden short sales became popular. Luckily, I had been doing them since the beginning of my career. And, when I heard that the numbers were, Bank of America had something like a staff of 5 for their short sale applications. And, before the crash, then after the crash, in 1 month, they went from like 5,000 short sale applications to 35,000 with that staff. And that's where they had to just hire anybody and everybody. And, in your experience and my experience, I can certainly, more than on my hands count how many times I had to call the bank, got 7 different answers from 7 different people. The foreclosure department wasn't talking to the short sale department. And, unfortunately, as the homeowner just sits there and is in foreclosure, waiting for the next set of documents to adjust their mortgage or whatever they were doing to try to keep their home. These paid employees and new employees are learning the system and aren't going to become experts for months, if not years. So definitely get everything documented, like Matt said. But I guess the bottom line on the modification section would be, if you're already modified, I personally think you should seek professional help. Company like Matt's, they're experts at it. Attorneys, whatever you got, somebody to protect you and look at your paperwork and make sure you're getting the proper information and that it's true. And just understand, if your loan is modified, a lot of times that bank picks right up where they were in that foreclosure process. Where if I stop paying my mortgage today, I might have a year or 2 before my bank actually gets the property. And during that time, I can renegotiate and try, modifications and everything else. But if you were already almost 2 years missing payments and on your way to foreclosure, the actual sheriff's sale, that bank may be able to pick up and have you out of that house very quickly after this obviously subsides. So Matt, what else should a homeowner be looking at? Where can they get some resources from you when it comes to everything that's going on, deferring payments and more?
Well, I mean, look, first of all, they could follow me on my regular Facebook page, which is Matt Merenoff. They could go to if you're an investor or real estate agent, we have a page set up specifically for short sales, which is Short Sales 101. Short Sales 101. It's on Facebook. That's a private page that we have. You have to answer the 3 questions. I'm going to tell you flat out. We've had about 36 people in the last 3 days try to come on and get onto the page. If you can't answer how long you've been in the industry, what line of work you are, and an email address, you should not even be in the group. So out of 36 people, I think we actually put in maybe 20 people. That's 16 people. I used to respond back and say, guys, you got to answer these questions. Now I'm like, forget it. It's not even worth it. Because if they're not answering the questions from the beginning, they're never going to answer it. What's my advice? My advice is very simple. Stay on top of your bank. Call your bank for updates. Get the paperwork that you have. Look, if you want to just have us review it and peruse it, no problem. You could send your paperwork to an email address that I'm going to give you right now. It's very simple. It's info@RERGroupLLC.com. Info@RERGroupLLC.com. Just put in the remarks section, Matt, can you please review my paperwork for my forbearance or my reinstatement?
Yeah.
It's really that easy. I mean, it's not even a 5-minute quick read for us to look at it. And then, obviously we'll shoot back and say, look, looks good. Talk to an attorney. Don't talk to an attorney. Call your bank back. Ask them why they put this specific stipulation in it. We don't mind doing that. We are gearing up right now. Matt, I know I talked to you about it about a month or so ago. we were getting updated software for our system. The new software, I think, is going to be ridiculous based on what we had before. The software we had was like a nice Mercedes. Now we got a jacked up Maserati 2025 that we're using as far as the software. So I'm pretty excited about it.
Good.
But as far as like, reaching out to my company, you could call us toll free. The number is 24 hours a day, 7 days a week, 365. You could call in with your questions. Obviously, if somebody referred you to it, please put in it that they actually referred you. That phone number is 866-739-3960, 866-739-3960. And, look, we just want to try to help as many people as we can, during this time.
Before we get off here, I just wanted to, for those who find that they can't keep their home, some people, to me and you, short sale, we know what it is. We're in the business. So let's talk about what a short sale is, so that people kind of understand who qualifies for a short sale if you're going to relocate and walk away and all that stuff. Do you have to be missing payments? All that, all the things that you and I know, but the general public may not. So go ahead and share what that is.
Matt, that's a really great question, and we get that question all the time. It really comes down to the servicer or the lender. Some people might want you to miss one payment, which is 30 days. Not really a big deal. If you can make your payments, I tell people make your payments. People are like, well, but Bobby down the street didn't have to make his payments. Well, I don't care about Bobby. I care about yourself. If you could stay current, and I know that there are mortgage companies out there that if you're current and you do a short sale on your property, you can actually go buy a property right away. Yeah. But as far as staying current on your mortgage, yeah, I think you should stay current on your mortgage. You can absolutely, from what we've seen, do a short sale on a property when your mortgage is current. That's really super important to understand. Matt, the reason why, and this is going to come out wrong, the reason why I'm attracted to you, Matt, not physically, is because you understand my side of the business.
Right.
You've been in the trenches. You've done short sales. You've dealt with REOs, distressed real estate. So for me, it's an easy talk. But if somebody's a real estate agent and they don't understand what I'm talking about, and the general public, most people don't know, like in the state of New Jersey, you just need a title company to close. You don't need an attorney to represent you on closing on a property. So there's a lot of things that nuances that people don't understand, where they really could understand with like leaders like yourself, me, obviously. I mean, I met you through Melissa DeSantis. Melissa loves me. Melissa did short sales for 10 years. Melissa made it very clear she'd never do another short sale ever again because she knows what goes into it. And I think she did a deal with, she did two transactions, two houses, 3 transactions. And she made over $55,000 in commissions off of those 2 properties with those, 3 commissions, which is outstanding.
Right.
So there is a way that if you're a real estate agent in this industry, you can absolutely profit. But I want to make it clear, if you're a homeowner and you're in trouble and you want to find out your options first, obviously you can reach out to me directly. You can reach out to Matt directly. You're going to deal with somebody who's going to give you the opportunity to try to first keep your house.
Yeah.
But if it doesn't work, you got to look at other options.
Yeah.
And if you don't look at the other options, you're going to become a statistic. Yeah. I mean, Matt, I don't know if you've had this before, but I've had people call me up 6 months after I spoke with them, and I said, hey, how things going? Oh my God, it's horrible. I need to talk to you. You're right. The attorney didn't do his job. His paralegal was working on it, and things just didn't work out. Okay, well, what happened? Well, the house went to sheriff's sale. Okay, well, when did it go to sheriff's sale? 2 months ago. Well, I can't help you.
Yeah.
So in Jersey, you have a 10-day redemption. But if you're upside down on your property anyway, and there's no equity in it, why are you going to try to redeem it? Yeah. But at least save yourself from having a foreclosure on your record and being able to move on to the next phase of your life.
And let's talk about that. Let's say it does come down to making the decision that just moving out is the better option in selling your home, and you're upside down, guys. So if for the homeowners that are watching this, so you understand what a short sale truly is, it just means that your balance is higher than what we can give to you after all fees are charged at closing. Okay, so on 200,000, let's say I usually use about a 7%, includes realtor fees and state taxes and closing costs. That's going to be 14,000. So if I sell your house at 200 and you owe 200, you're short 14 grand. So in that case, you apply to your bank and say, I can't afford 14 grand. Can you forgive me the 14 grand? A lot of times they do. Sometimes they don't. Sometimes they negotiate. There's a process to the whole system of applying for it, which Matt and I are experts at. But that's all it is. If you're missing payments and things like that, what I try to tell everybody is this doesn't cost you anything to try a short sale, to attempt at saving your credit. So it most of the time is in your best interest to apply for short sale. And then there's bankruptcy as well and some other options. But in general, that's what short sale is. And Matt, what does it cost a homeowner to apply?
For a short sale?
Yeah. Yep. Big zero. Guys. You guys, if you're a homeowner and are going to sell your home and you're upside down, if we're going to do a short sale, the bank covers my fees, Matt's fees, any attorney's fees, and your bank's job is to negotiate with that realtor and everybody else and all the fees that might be on there.
Well, Matt, let me just clarify real quick. So I get paid by the buyer,
right?
So if the buyer's purchasing a property, let's say you owe $200,000, right? What's the medium price home? So let's say it's $200,000, and let's say for whatever reason, all fees, everything, you're up to $275,000.
Right.
Short sale goes through at $150,000. My company gets a fee on top of everybody else's fee. It's either a percentage or it's a flat fee that we get paid, and the buyer pays it. Now, people get stunned by the fact that there's an additional fee. But I got to tell you, if you're getting a house that's $200,000 for $150,000, $160,000, and let's just say my fee is $10,000, you're still getting that house below fair market value of the property. That's where the value lies versus not being able to fight the bank, dispute the value, do a variance. There's a lot of things that come in place. Let me back up real quick on this one. You had mentioned something about bankruptcy.
Yep.
This is what frightens me with people that run and do bankruptcies. They don't follow through with the attorneys, or the attorneys don't follow through. Now the bankruptcy falls off for whatever reason because paperwork wasn't filed. So now stuff wasn't filed. Now all of a sudden there's a dismissal of the bankruptcy, not a discharge. Dismissal, discharge. You want a discharge. You get a dismissal. Now all of a sudden you think, okay, cool. I did my bankruptcy, but you never get the discharge.
Right.
Why didn't I get my discharge? Well, your attorney never followed through and followed the paperwork, so the bankruptcy essentially got kicked out. What do you mean you got kicked out? Or what if it wasn't filed properly? Or what if the attorney didn't file your property, the actual mortgage itself, in with the actual bankruptcy? Matt, has this ever happened? Yeah, of course. It happens all the time. I had a bankruptcy attorney at my last event in Jersey. Matt, you're going to be at the new event in October, right?
Yep.
I had a bankruptcy attorney there. The bankruptcy attorney stated that 7 to 8 out of bankruptcies, 7 to 8, that's 70 to 80% of bankruptcies filed in the state of New Jersey are filed incorrectly.
I think I know that attorney. He's one of the leading guys in New Jersey, right?
Lee Perlman.
Yep. He's in my market. He's in Cherry Hill. So I've met with him and talked with him before. He's a great guy. And that's truth, everybody. I mean, this is what happens behind the scenes in real estate that Matt and I are experts at from all the time invested. So yeah, bankruptcy is another option. At the end of the day, I guess what we're here to say, Matt, is what? Talk to an expert, right?
You have to talk to an expert. I mean, Matt, if somebody comes to you right now and it's like, look, I know let's just say you have a deal right now it's supposed to close. And because of what's going on right now, the lender doesn't feel comfortable with closing the transaction right now. And they've got to wait 30 to 60 days. Well, Joe homeowner has another property that they have to close on. So maybe they can get a bridge loan. Maybe they could try to work something out. But here's the guy who's buying the property. Now his car payment is up. So now he has to go get a new car payment.
Yeah.
For me, I would tell the guy, look, see if you can extend your lease. Because now, if you get into another lease or buy something else, your debt to income might change because chances are you're going to want the latest and the greatest. And your car payment might have been $425 before, but now you're over on your miles, and now you're at $510 a month.
Right.
That could throw you right out of your debt to income ratio, and now you can't qualify to buy the house. Now there's a chain reaction that comes down into effect. So I would say reach out to somebody like Matt to find out, look, we're trying to buy this house. Should I get a car now? Should I wait? Should I open up 9,000 credit cards and bang them all out? The answer is no. Right. But unless you ask somebody who's an expert, you're never really going to know it.
Yeah. Yeah. So Matt, I appreciate your time here. Any last words for everybody? We're going to put your company information in the comments below. Actually, we do have one question, which I guess a short answer, if we have it. It says when somebody defers on their mortgage, how does that affect them when they apply for a mortgage again in the future? He said in here, maybe it's too situational to answer, but I guess my short answer would be, I don't believe deferments reflect on credit. Tell me yours.
So I'm not 100% sure, but if I had to guess, you guys got to remember, right now, if you are late, they're not reporting that you're late.
Right.
So if it is a true deferment, it's basically you're not going to skip a beat.
Right.
So maybe the term of the loan might change. You know how like when you do on the credit report and it says what your monthly payment is and the term of the loan might be 360, but now maybe it might say like 363.
Right.
Something like that.
Yeah. Yeah. So Andrew, I'm not sure. I would venture to guess that it's up to the lender whether or not they report that, as a missing payment for the short term that it was missing. Mm-hmm. And in that case, there would be letters of explanation and stuff that would get you by that. But all right, Matt, hey, great talking with you. Any last comments?
No, Matt, I appreciate coming, having me come on. I've got a Yorkie poo in the back that's yapping away. And if you guys can hear it, if anybody wants it, I'm willing to give it away for free, but you got to get past my 11-year-old.
There you go. All right, man. Well, I appreciate it. Good talking with you today, and we'll catch up again soon.
Verify, clarify, get it in writing. And guys, remember, it's not a no until you get a restraining order.
All right, buddy. Good to see you. Take care.
You too. Take care. Bye-bye.